See, in the previous class, we have seen the concept of overheads. So today we will take a simple costing process and let us try to understand how the cost of a product is ascertained. Say, for example, we have two departments, right? In our organization, we have two departments. In one department, we are manufacturing computer tables. In another department, we are manufacturing iron safes. Okay. Now, in the computer tables manufacturing department, what is the raw material we use? Wood and iron frame. So when you purchase the wood, that is directly identified with the department A. So two materials, 30,000. Then labor. So in the department A, there are workers who are actually engaged in the manufacturing process. So the wages paid to these people is directly identified with the department A. So to labor, 20,000. Then there are some other expenses which are exclusively incurred in the department A, which is the direct expenses for the department A. Let us say that is two other expenses, 10,000. Coming to department B. In the department B, we manufacture iron safes, right? For the iron safes, the raw material is iron sheets, okay? When we purchase the iron sheets, that is directly identified with the department B. Two materials, 40,000. Then there are workers who are directly engaged in the process of manufacturing of iron safes in the department B. So the salaries and wages paid to that people, those people is directly posted to department B. So to labor, 50,000. To other expenses, 20,000. So these are the direct expenses, right, for the department B. And these are the direct expenses for the department A. Now, this department A and department B, they are working three shifts. Okay. So in order to provide lunch and dinner facilities, we also have set up a department C, which is called canteen department, right? So canteen department. So in the canteen, we use rice, oils, vegetables, wheat, and other groceries. So these are all the materials which are directly identified with the department C. Let us say two materials, 10,000. Then in the canteen, canteen manager is there, chefs are there, then then stewards, cleaners, servers, right? Canteen assistants, etc., etc. All these people are working in the canteen department, right? So the expenses incurred for these people, I mean, the wages paid to these people is directly identified with the canteen. So to labor, 20,000. Then there are some other expenses directly incurred for the department C. So to other expenses, 10,000. So these three are the direct expenses for the department C. Okay. Then in order to administer department A, department B, and department C, we have one department D, administration department, right? Now, in the administration department, we are using some materials. So that is directly posted to department D. So accountants, office boys, right, other clerks are working in the administration department, right? So the salaries and wages paid to those people is directly posted to department D. So to labor, 20,000. And there are some other expenses which are directly incurred relating to department D only. So that is direct expenditure. To other expenses, 10,000. So this is your organizational setup, right? See, this is your entire organizational setup. These are the four departments in your organization. Okay. Now, here, this department A and department B are called production departments. Department D, administration, department C, canteen, are called service departments. Here, what is the job of this department D? To render its services to department A, department B, and department C. The department D takes care of administration of department A, department B, department C, right? So department D is giving services to A, B, and C. Suppose you don't have the department A, department B, and department C. Then is it necessary to have the department D, administration department? If you don't have the department A, B, C, right? Is it necessary to have the department D, administration department? Yes or no? It's a common sense, right? There is
Yes.
nothing. Sorry?
If you don't have department A, department B, you are asking, do you need department D? Am I right?
Yes, we don't need department D.
Yeah, exactly.
So if you don't have the department A, department B, department C, you don't need department D, right? That's why in the cost accounting, always it's a principle that the cost of the service departments are to be borne by ultimately production departments. So in this example, because this department D is giving services to department A, department B, and department C, right? The management wants to allocate the cost of department D, right? 1/3 to department A, department B 1/3, department C 1/3. So the total cost of department D is 60,000, right? Now 1/3 to department A means 20,000. In the department A to department D 20,000. In the department B again to department D 20,000. So 1/3 of 60,000 is transferred to other departments, right? And the canteen department C to department D 20,000, right? Now here the cost of department D becomes 0 on 30th April. Then let us assume this is the data for the April 2024, right? So when you allocate the cost of this department D 1/3, 1/3, 1/3 to other departments, the cost of this department D will become 0 on 30th April. Again, from 1st May, the department D will be posted with expenses again. Now, here the canteen department, right? Here I am making one assumption that the canteen department is giving services to department A and department B, right? Only department A people and only department B employees are taking their lunch and dinner facilities in the canteen department. Administration department employees, they are not using the canteen services. Let us assume like that for the time being. So in that case, the cost of canteen should be borne by department A and department B only, right? Then that's why the management wants to allocate 50% to A, department A, and 50% to department B. Here, the original cost of department C is 10,000, 20,000 to 10,000, 40,000, right? Then the department C has received a cost from the administration department, 20,000, right? So the total cost of department C is 60,000. So 50% to A means 30,000 to department C. Then the department B to department C 30,000, right? Now again on 30th April 2024, the cost of this department C becomes 0. Again from 1st May, again the department C will be posted with the fresh expenditure. Okay, now coming to this department A. So what is the total cost of this department A? 1,10,000. See, materials, labor, other expenses. These are the direct expenses, right? Then department A again has got the cost from department D and department C. This is called indirect cost. So these three are direct cost and these two are indirect cost. Indirect cost means overheads. So the total cost of department A is 1,10,000. Then in the department A, in the month of April, you produced 100 computer tables. Then total cost is 1,10,000. Total output is 100 units. So cost per unit 1,100, right? Similarly, in the department B, these three expenses are direct expenses, right? Then it has received 20,000 from the department D and 30,000 from the department C. These two costs are called indirect cost. Indirect cost means overheads. So direct material, direct labor, direct expenses plus overheads. Total cost. So this is 1,60,000 is the total cost. So in the department B, in the month of April, we produced 100 units, 100 iron safes. So total cost divided by total output, cost per unit, 1600 rupees. This is simple costing process. That's it. So if you understand this, let us go a little deep into this. Here we have made one assumption. What is that assumption? Department D is giving services to, right? Department A, Department B, and Department C, right? So we allocated the cost to ABC departments. Then one assumption we have made is Department C is giving services to A and B only. But that is not the realistic assumption, right? Department C also will give its services to A, B, and D also, because administration employees also will take their lunch and dinner and supper in the canteen, right? That is the realistic situation, right? That means Department D is giving its services to Department C, and Department C is also giving its services to Department D. Following? Following everybody?
Yes. Yes, yes.
Others, Anil.
Yes, sir. Yes, sir.
Yes, Anil, you are a cost accountant, it seems, right? Yeah. Now, so here, this is the situation. We have the Department A and Department B, production cost centers. Departments and Department D, service, sorry, I don't get confused with the word cost centers. We will discuss later on. For the time being, production departments. Department A and Department B, production departments. Department C and Department D, service departments, right? In this case, Department C is giving services to Department D, and Department D is also giving services to Department C. Mutual transfer of services among the service departments, right? In that case, how the cost is allocated? See, Department A, Department B, Department C, Department D, right? So in the Department A, the direct cost is 1 lakh rupees. This is the data in the month of April. With the Department B, the total direct cost is 1,50,000. Department C, 1,000 rupees. For the calculation easiness, I have taken small amounts. Then Department D, 500 rupees. So out of these 4 departments, Department C and D are service departments. So the cost of these service departments is to be allocated to other departments which has received the services from this department. So the cost of Department C is to be allocated 50% to A, 40% to B, 10% to D. That is the costing department requirement. Then the cost of Department D is to be allocated, right? 50% to A again, 40% to B, 10% to C. Okay. Now, how this is allocated? There is one functionality which is called repeated redistribution of overheads. Why they are called overheads? So this is the direct expenditure for Department A, Department C, and this is the direct expenditure for Department D, right? We are allocating the cost of these departments and Department D to the Department A and Department B. So from the perspective of Department A and Department B, the cost of Department C and Department D are indirect cost. So indirect cost means overheads, right? That's why this is called repeated redistribution of overheads. So how this allocation is done in this case? First, we take the direct cost of every department. Now, the cost of Department C is 1,000 rupees. So how the cost of Department C is to be allocated? 50% to A. So 500 to A. Then 40% to B, 400 to B. Then 10% to D, 100 rupees to D. Now the cost of Department C becomes 0. Okay. Within brackets means minus. Then the original cost of Department D, 500 rupees. Then it was posted with 100 rupees from Department C. Now the total cost of Department D is 600, right? Now you take the 600 and that is allocated 50% to A, 300 rupees, 40% to B, 240 rupees, and 60 rupees to C, 10% to C again, 60 rupees. Now the cost of Department D becomes 0, but C has got again 60 rupees. Now, again, you take the 60 rupees. How it is to be allocated? 50% to A, 30 rupees. 40% to B, 24 rupees. Then again, 10% to D. So D is getting again 6 rupees. Now the cost of department C becomes 0. Again, B has got 6 rupees, no? So again, we have to take the 6 rupees and it is to be allocated 50% to A, 3 rupees to department A, 40% to B, 2 rupees 40 paisa to department B, and 60 paisa to department C. Again, you have to take the 60 paisa and you have to reallocate it. So D will get 6 paisa. Again, you take the 6 paisa and again you have to reallocate. 0.06 paisa will be allocated to department C. So it's a never-ending process because you are using percentages. It's a never-ending process. That's why we can add this 60 paisa here, right? That is 3 rupees. Now, what the total cost of department A? 1,0833. The total cost of department A is 1,0833. Right? Then the cost of department B, 1,50,667. Now, divided by total output. Department A, 100 tables. Department B, 100 iron safes, which gives you the cost per unit. Right? This is called repeated redistribution of overheads. Right? You might have done. Whoever remember, you might have seen that this repeated redistribution of overheads in the cost accounting. In SAP also, we use the same method, but user will not do it manually. There is just one checkbox somewhere. So when you select the checkbox, the system automatically executes this function. The system itself will execute that repeated redistribution automatically by itself. This I am going to show you in cost center accounting. For the time being, this is how we can find out the cost of product, right? This simple costing process knowledge is enough, right? We need not to worry about under absorption, over absorption, etc., etc. Forget about all those things, right? Because everything is taken care by the system in SAP controlling. Now, let us start configuration. Okay. See, there is enterprise structure for controlling also. We have seen enterprise structure for FI, right? Company code business areas and consolidation business areas. Similarly, in controlling also, we have the enterprise structure. So the main organization unit in controlling is controlling area. The main organization unit in controlling is controlling area. So controlling area means it is the organization unit in controlling for which all the controlling activities are conducted. Suppose if you look at in the FI, right, we have processed all the FI business transactions with reference to company code, either GL accounts, vendor accounts, customer account, asset accounts. We have processed all these business transactions with reference to company code, right? So in controlling also, right, we perform all the controlling activities with reference to controlling area. So at this level, at the controlling area level, the CO component records, analyzes the overhead related activities in the cost element, cost center accounting, and internal orders. Then manufacturing related activities and expenses, product costing, and also analysis and evaluation of activities of the internal units, profit center accounting. It's a very, very wider definition, right? So as we have defined the company code in FI, in controlling, we have to define the controlling area. But there are two scenarios in defining the controlling area in controlling. Controlling area, same as company code. That means, in this case, the controlling area is maintained at the company code level. The controlling area is maintained at the company code level. So maintaining the controlling area at the company code level means what? For each company code, you maintain a separate controlling area. Suppose, for example, you have 3 company codes, right? First company code, one controlling area. Then for the second company code also, one controlling area. Then for third company code also, you maintain one controlling area. So for three company codes, you maintain three controlling areas. Right? So then first company code is assigned to first controlling area. Second company code is assigned to second controlling area. Third company code is assigned to third controlling area, and so on. In that case, all the expenses and incomes information of company code 1 will be transferred to first controlling area. All the information of company code 2, information here refers to expenses and revenues. So the expense and revenues information of company code 2 will be transferred to second controlling area. Then the expenses and revenue information of company code 3 will be transferred to third controlling area. Then they are analyzed in the respective controlling areas. That is the meaning that controlling area same as company code. So for each company code, we create the separate controlling area. Then all the expenses and incomes of each company code is taken to the respective controlling areas for analysis purpose. Then see like this. Scenario 1, controlling area same as company code. So we have the company group, right? Under the group, under the company, we have multiple company codes, right? Then for each company code, you maintain a separate controlling area. Means one-to-one relationship. One company code is assigned to one controlling area only, right? Then in the controlling area, under the controlling area, you create the master records for, right, all the controlling objects like cost center, internal order, profit center, etc., etc. In every controlling object master record, we assign the business area. We assign the business area. Okay. So that's how when we assign the business area in the controlling object master records, the FI organization units and controlling organization units are linked with each other. So when we use the scenario controlling area same as company code, we cannot use the following functionalities. Number 1, cross company code functions, cost component split, group costing, transfer pricing. So what are all these functions? We will discuss later on. For the time being, please remember that in the first scenario, right, controlling area same as company code, we cannot implement these 4 functions. The second scenario is cross company code cost account. In this case, the controlling area is created at the company level. See, under the company, we have 2 company codes, company code 1 and company code 2. So we define the controlling area at the company level. So defining the controlling area at the company level means all the company codes of the company will be assigned to same controlling area. Right? That means we have company code 1, right? Then company code 2, then company code 3, right? So all these 3 company codes will be assigned to same controlling area. That is called cross company code cost account. That is the meaning of defining the controlling area at the company level, right? So in this case, company code 1 is assigned to same controlling area and the company code 2 is also assigned to same controlling area. Then what happens? All the expenses and revenue information of company code 1 and company code 2 is available in the same controlling area, right? So in this controlling area level, now, we can compare the total expenditure of company code 1 with the total expenditure of company code 2. We can compare the total revenues of company code 1 with the total revenues of company code 2. Again, we can compare the profits of company code 1 with the profits of company code 2. Because the entire information of both the company codes are available in the same controlling area. Then under this controlling area, we create the master records of controlling objects relating to all the company codes. Then the business areas are assigned to in the controlling object master. This scenario is clear. Is this scenario clear?
Yes, sir.
Yes.
Okay.
Yes.
Now,
Yes, sir.
now, here for the same controlling area, right? You assign the company code 1 and company code 2, right? Then we can compare the total performance of company code 1 with the performance of company code 2. In addition to that, in the company code 1, we have 3 departments. Department A, Department B, Department C. Then under the company code 2, we have 3 departments. Department P, Department Q, and Department R, right? So in addition to comparing the performance at the company code level, right, we can compare the performance of Department A of the company code 1 with the performance of Department P of company code 2. Similarly, we can compare the performance of Department B of company code 1 with the performance of Department Q of company code 2. Similarly, we can compare the performance of Department C of company code 1 with the performance of Department R of company code 2. Intercompany comparison we can do, intra-company comparison also we can do. That is the advantage of cross-company code cost accounting. So, in the case of cross-company code cost accounting, right, we can allocate, we can reallocate the costs across the company codes. This we will see in the cost center accounting. Then product costing for the products of all the company codes commonly. It facilitates the group costing. It facilitates the transfer pricing among the company codes. So these, whatever the functions we cannot implement in the controlling area same as company code, we can implement those functions in the cross company code cost accounting. But to assign the several company codes to the same controlling area, the following 2 conditions must be satisfied. Otherwise, we cannot assign the company codes to the same controlling area. Number 1, all the company codes should use the same chart of accounts. All the company codes should use the same chart of accounts. So what is the scenario wherein all the company codes will use the same chart of accounts? When they are in the same nature of business, right? Then all the company codes must use the same fiscal year. Same fiscal year means the number of normal posting periods should be same. In every fiscal year, the number of normal posting periods should be same, but the number of special periods can be different. This is first important. First point is important. The number of normal posting periods should be same. Then the start period and the end period of the fiscal year should be same. Means every fiscal year should start with April and every fiscal year should end with March. Otherwise, every fiscal year should start with January and every fiscal year should start with, should end with December. Otherwise, every fiscal year should start with October and should end with September. See, whatever may be the fiscal year, right, used by the several company codes, they should start with the same month and end with the same month. Then the start date and the end date of each period also should be same. So unless these conditions are satisfied, right, we cannot use the cross company code cost accounting. In that case, for each company code, we have to define a separate controlling area. First scenario, right? So first we will start with the first scenario, right? Controlling area same as company code. Then we will go for second scenario, right? In the cost center accounting, somewhere we will go for cross company code cost accounting, right? So that is the meaning of the controlling area. So maintain controlling area. So this enter, I cannot stop this step. This step is a very big step, right? Lot of things are to be explained here. Please remember, in the controlling, right, the configuration volume is very less, but business logic is very huge. So we have to understand a lot of logic here, right? So I'm there to explain it. Don't worry about it. Okay. So this we will see in tomorrow's class. Tomorrow and day after tomorrow also, we do have the class, right? Same time. Okay. Same link.
Okay, sir.
Okay, then see you tomorrow.
Thank you.
And I have sent you the material also, controlling material, MM integration, SD integration.
Yes, sir. Take and print out.
Everything I have sent you. Take the printout and get it spiral.
Yes, sir. Did.